straight after this document. I just prepared it like 20 minutes ago. So the Kenyan payroll has several components. Number one, there's what we call payee or income tax, fringe benefits, SHIF, NSSF, or a pension offered by the government. Some people will have their own pension or provident fund. And then there are things like housing levy and so on. So to set the I'm looking forward. But one of the reasons, one of the goals of doing this webinar is maybe we wanted to highlight that most payrolls in Africa are more or less the same. I was talking to someone actually, he's online Ken, and they said most likely because these were prepared by some external organizations as they are trying to get people around here probably to get our act together somewhat. So for example, the income tax rates for Kenya, they look something like this. So from above 24,000 a month gross pay, graduated, as you keep earning, then you keep getting taxed more, for example. So they have a column for annual and they have a column for monthly and then annual. This information I picked from RN Payroll. I probably need to give them credit because they have all this material. Everyone who wants to test payroll quickly, they just go to their website. The other payee parameters or income tax parameters, as we mentioned. For example, you see they're mentioning meals and so on, aggregate benefits and so on. Pensions, because you deduct pension from gross pay before you calculate what we call gross pay. I'll come to that in a few. So to understand payroll, one of the things you probably need to do for Kenyans is you probably want to go through the payee guide because that's what explains exactly how this is done. It's shared by KRA somewhere, you can look for it. But maybe if you don't have it, I can open it for the sake of this. It's an old one. I think they have others updated on their website, but it's always been a document that has been around for the longest time. What is this? Pay guide looks something like this. So it explains all the components of Kenyan payroll, all the nitty-gritties. These are definitely old, but it gives you an idea. You need to probably go through this before, and if you don't understand how the payroll is structured around you, then everything makes sense afterwards. So the other thing I wanted to mention is most payrolls in Africa, they more or less look the same. So this is the Algerian payroll, same concept for income tax, because that's one of the major elements of calculating payroll. Uganda, same concept. DRC, Burundi. I think we have done for Burundi, Rwanda, DRC, Uganda up to now. I think Tanzania too. Or we have set them up for customers and so on. Nigeria, same concept. I think we have set up for Nigeria too. Tanzania, same concept. I was checking for South Africa. I understand it's a bit complex a bit. We have never done it, so I don't have the internals. Maybe we'll check it out later. This webinar is maybe let's say this is part 1. We intend to do another part 2. I was unable to cover all the material I was planning to cover in one session. The next one maybe will be to highlight why we don't use what we call income tax slabs. So this having set context, to set up all this, let's now just take Kenyan example. But I'm saying even other countries who are trying to set it up, the concept is the same. That's why probably I was highlighting other countries. So the system is called, so what happens is you install ERP next. And then you install something we call FrappeHR. This is important because I think before version 14, they used to version 13, I can't remember. They used to be the same application. So you would install ERP Next and it would come with all the modules, the issue, accounting, assets, selling, procurement, and so on. And then it would have all the HR modules. But along the way, Frappe split them into separate apps. There are many other apps, for example, but I'm just saying for the case of HR and payroll. Then there's another app called Lending, which handles employee loans management. You can use it for customer loans, but if you want to manage internal loans for your employees, still you need to install that app. So when you have your ERP Next or instance setup, you'll have the issue ERP Next modules. Then you'll have HR, which will come with the issue modules, recruitment, performance, leave, expense claim, shift management, and then it will still come with payroll. And by payroll, which is our main area of focus today, we are talking of salary structure, salary components. I'm coming to those in a few. And then you need to install the lending app, which will have the loans management, assuming you want your employees to apply for loans and so on and so on. And before you install FrappeHR, ERP Next is a prerequisite because they share some ERP Next depends on some components that come with ERP Next. For example, company, because when you're creating an employee, for example, you need some components that pre-exist on ERP Next. For example, the company and other details. I'm just saying there are some shared doc types if you are familiar with the ERP Next or Frappe framework. So that said, when we go to payroll directly, the first step is you probably want to have all your salary components. Generally, people in Kenya, they used to call, or they still call them payroll codes, but in ERP Next or FrappeHR, they are called salary components. So here we are talking of the issue of gross pay, overtime, leave allowance, special allowance, salary, basic pay, all the components you can think of, commissions, loans, mortgage, for example, and so on. So these are formula based. And if I was to open one, for example, let me open personal relief. When you open a salary component, it will have several elements. This is a custom field for P9. I'll come to that for Kenyans in a few, and P10. But normally we have, besides these parameters, for example, think of basic salary. When you're paying people, assuming someone joins in the middle of the month, you want to pay them for the days they have worked for the company since 15th up to the end of the month. Or if they leave between the months, you want to pay them beginning to when they left, say on 11th and so on. So you need to take depends on payment days so that the system prorates based on the days. Then there is usually a tab for conditions and formula. So let me say, payroll in FrappeHR, it's formula driven. You don't need to write code to customize it. I don't think we have ever written code to customize it unless we are building something specifically outside this, like Cassio's payroll or the P9 reports and so on. So you just build your formulas here, or you can set up what we call figures, for example. For example, if you open, say, maximum pension, you will see we have predefined it. It's like a constant. It's just an amount. We know maximum pension, you can only be relieved a maximum of 20,000 Kenya shillings. And they have examples of formulas here, so works very well. For each of the component, if you're going to post it, you can attach it to a particular account for your GL and so on. For example, if you pick something like gross pay for hours, the formula is simple. We just sum all the basic salary, all the allowances, for example, that go into gross pay and so on. So step one is the salary component. The second step is you define what we call your salary structures. There are things like payroll period, income tax slabs. So number one, when people start to explore payroll in FrappeHR, they immediately go into trying to set up the tax slabs into income tax slabs. They don't work as expected. We raised this with Frappe. I'm supposed to document what is the actual issue. I think I've been short on time, but I will. But ideally, it doesn't work off shelf if you use income tax slabs. So you need to kind of be a bit creative on this. But even these will be fixed because if this kind of works off shelf, then anyone who is checking this out can go and set it up directly, and then it will work for them. And that kind of helps in product awareness and so on. So the way around this is you go and set up the formulas via another place called we call a salary structure. So ideally, salary structure, for those who are a bit familiar with how government payrolls work, salary structure is like how you would have pay grades, for example. So you have grade A, these are their predefined allowances. This is their predefined basic salary. These are their predefined pension and so on, or grade H and so on and so on. So that's the concept of a salary structure, but you can use it for a lot of other elements. So what we have is we have a salary structure here. This was updated yesterday, where you can set up your formulas for your payroll. I'll come to this in a few. So when you're setting up your salary structures, number one, you can set up other parameters. Is it for which company? Because remember, ERP Next is multi-company. By multi-company, it means assuming you have your company has a legal entity in Uganda, DRC, Tanzania, Burundi, Somalia, Ethiopia. So when you're setting up your salary structures, you'd set up for all those countries because maybe employees, they are paid based on the tax rates or income tax rates for those specific countries. So you can pick the company, of course, letter N. You can choose the currency. The payroll is multi-currency. By multi-currency, it means even if you're doing payroll for Kenya, you might choose to pay some employees in Kenya shillings, others in Uganda shillings, for example. And then you can set parameters whether you run to run your payroll frequency in monthly, daily, weekly. So when you create a new one, generally those would be editable, for example. So there'll be options here, fortnightly and so on. Or salary based on timesheet, assuming you're paying people based on timesheet. So they go and say, I worked overtime or so on. There's an overtime module. We won't come to that. For now, let's just cover the basics. So when you open the salary structure, besides this, we have the earnings and deductions element. So what you want to do is you want to add all these components, for example. And when I mean add them, for example, assuming we do this and we are doing this beforehand, you want to give it a name. And then you can come and say, yeah, the first component is basic salary. It will bring the formula that was set up on the salary component because this was already set up there. And then you can have gross pay, for example. That's what I'm saying. You kind of need to understand the structure of your payroll you're about to set up. You can say acting allowance for this salary. For this salary structure you're setting up is normally 6,000, for example, as an example. Then you can have components like taxable income. Taxable income is what is actually taxed, because remember we have gross pay normally. Then you deduct pensions to arrive at what is taxable income. And then you can define your deductions. Deductions will be things like NSSF, for example, housing levy, payee, for example, NHIF. But let me come to how you structure those, because you don't just do them directly, for example. So when we open this one, you see we have basic salary, we have gross pay, then we have taxable income. They are all based on some formula, for example. Then when we come to deductions, we define the formulas for NSSF Tier 1 and Tier 2. So we have a maximum Tier 1, which is 8,000, maximum Tier 2, which is 72,000. Then you have like a tabulation of the same. So it's like you're building it even on Excel, frankly. So you do all these calculations, and then eventually you have your actual calculation of a NSSF. So when you look at all these components, even though I'm not going into details, that's what I'm saying, these are goal of whoever will be setting this to spend some time reading the pay guides of their respective areas, regions, and of course reading the manual. So when you're setting components, salary components, there are many parameters I was talking about here. For example, you need to understand, for example, what does do not include in total mean? What does statistical component mean? Statistical component means you can use it to do calculations, but it isn't part of the overall total, something like that. So there are many elements here. Then of course you have your employer pension, and then you have your sum, and then your maximum provident. So then you actually get your provident fund relief, which is sum of pension minus excess provident. Excess provident is basically anything above 20,000. Think of this thing. Assuming you contribute 10,000, then you have a voluntary pension of another, say 15,000. That is 24,000. And then you have an NSSF, and we always factor the employee one, 1,800 as an example. So eventually, the government will only deduct a maximum of 20,000 from your gross pay before they arrive at your pension. So that's why we are deducting excess. Excess is what is above the maximum, which is above 20,000 in this case. Now we have the pay. The pay, we still build this bracket. So these brackets you see here, this is what we are trying to build here. So we have pay band 1, it's 24,000 minus 0 times 10%. And then the next pay band 1 maximum. And then we have pay band 2 and so on. So this is this minus this times 25% and so on. So we do all this. Basically, it's like you're doing this using a program. When you do this using a program, normally what you do is you kind of loop through this, where you say 25 minus 0 times this, and then you move to the next one. So the figure you get here, you keep summing with the next one, the next one, the next one, until you arrive at what we are calling the actual gross pay. And the reason we have gross pay is so that, you see, what happens is we will calculate your total pay you're supposed to pay, or income tax, for example. We arrive at what we are calling gross pay. But gross pay is not what we pay as income tax. It's not what we pay as pay. What the government does, it deducts what we call reliefs. One of the reliefs is personal relief of 24,000, and we have another relief called the insurance relief, which is normally calculated as 15% of the insurance premium you're contributing somewhere. So we have gross pay, and then we deduct the reliefs. I don't know why they do this, from a political level. I don't know who said. Why don't you just deduct people? Why do you have to do another relief? But that's how it works. So you come and say gross pay minus the reliefs that the government has offered. Then you arrive at your pay, the actual income tax that will be deducted that month. And then, of course, we have the other elements that have been introduced recently, employee housing levy. So we just calculate the allowable, because now you see it's basic salary trans. Specific allowances, because not all allowances, otherwise we'll just say gross pay, because gross pay is basic salary plus all the allowances or earnings that you've been given, for example. Then we calculate employee housing levy, employee housing levy. So I'm doing this. If you go to employee housing levy and you go to employee housing levy, you will see the parameters on the salary components are a bit different. So you'll see this is the employee, but when you go to employer, you'll see do not include in total. Same with employer and NSSF. What basically this means is when you are calculating or summing up your deductions, ideally we shouldn't your employer deduction, much as it is being paid by your employer to match your deduction, it's not part of your deductions. And then of course we have meter, which is a constant, it's just 50 shillings. This is a new fire audit. And then of course we have SHIF. This is how it's calculated for now. So it's certain percentage, I can't remember this brand sales, this times gross pay. Initially it was NHIF, and NHIF was based on like a table, which still you could do. This is the same concept we were using to do NHIF. So we would use this concept for NHIF, but this one is straightforward. So that is it. So you have set up your salary structure. What is the next step? Generally, the next step is you go and pick that salary structure and you assign to employees via what we call salary structure assignment. So if I was to go back here, so we have our salary components, we have our salary structure, then we assign salary structures to employees. Think of assigning a grade which determines how much you'll be getting. If I want to use that concept, because you can even base this on grades and so on. These are just tools to do it en masse and so on. So by salary structure assignment, this NSSF, right? Let me just pick one so that we use what we have been using as an example. So you can have multiple of these, because what happens every time there is changes in payroll, we just go and define another salary structure, and then we just update all the sites, and then we tell the users to assign them to the new the employees to the new salary structure. So when they run the payroll, it will auto pick these new formulas and so on. But coming back to this, when you go to the salary structures that have been assigned, if I was to pick just one person, let me pick Brian or what is here. So you'll go and give them the base. The base is actually the basic you pay them every month. And then you'll set up the salary structure. You'll set up from when it starts, and of course payroll payable account, because you need to post this to GL later and so on. So this date matters, because assuming this is March, right? If there's a new update to the payroll of your country, or for some reason you even want to increment salaries generally, you will go and create another salary structure assignment and say it starts from April. So ERP Next or FrappeHR, when you're running your payroll, will pick the latest salary structure assignment, for example. So that is it. So this is your base. So now you have more or less the components you need to run your payroll. You have your salary components, you have your salary structures, you have assigned employees to salary structure assignment. Of course, you have your list of employees somewhere. I'm not going to those. If they come up, you already know you have your list of employees somewhere. There are many. Let me use I use this for demos when I'm doing demos, because I know they have data. So you have the information, which company they are on, department whom they report to, joining or contractual information, the addresses, attendance, biometric device, holiday list. You approach their expenses, leave, and so on. Salary if you pay them via bank or other mode of payment. So this is not to capture the money, but to capture mode of payment. Other information, passport, their profile, education, and so on. And the personal is somewhere we have a statutory details. So these come in National ID, NSSF, NHIF, tax ID, and so on. These they come from an app we have built called Navari Local Customization, so CSF. So basically, this offers what we call the issue reports, P9, P10, NSSF report, NHIF report, HELB report, and so on and so on. They are just custom reports we have built to make life a lot easier. And they come with these things I'm calling a sample salary structure and a sample salary component. Sometimes this is missing, maybe, but the people who try to install this app. But if you pick this salary structure, we normally update it often, and you go and upload the salary components and update your salary structure. By default, you will get this. What I was trying to describe here, with all the formulas and the sample data, for example. So maybe what you want to do is go and edit for your case, but you can go, it will come with all this. And then when you import the salary structures, it will come with the most active that is on that Excel, for example. There was a suggestion, maybe we should be, when you install that app, we should pre-install those samples. I think we'll do it. We're trying to do it, but I think we missed something on code somewhere. So every time you'd install it, you'd update the existing and it brought problems. So maybe we need to recheck that. But it would help for those who are installing this app and they just want to install and have samples in their system, because this is on Frappe Marketplace. Frappe Marketplace is where people put all these apps. If you're not familiar, for example, I don't know how experienced the people on the call are with the ecosystem, but this Frappe Marketplace where you have something like this, for example. So you can go and search for CSF, okay, for example, or Kenya, just as an example. CSF. Let me just say Kenya. Or your country if you want. So this breaks Kenya compliance for the tips. But when you open, you'll see a lot of other apps. So in specific, you're looking for this CSFKE. So it has all these details. So maybe what we do, Amma will do, it's when you install this, then it pre-installs with the sample salary structure in the components if you wish, and see how to do it. Or the same, going back to the payroll. So you have your employees. I didn't go into that. So now you come and assign them what we call salary structure assignment. So when you do this, your payroll is more or less done. The next step is now you want to run your payroll. And there are two ways you can run your payroll. Normally, if you are running for multiple people, you just use what we call payroll entry. And the way the payroll entry is, let me just show you how you create that. So you come and say payroll entry, it will pick out the details. You say you're running for month or whichever period, monthly, for example. If it's based on timesheet, that's our whole ballgame, but it will pick the current month. So here, when you're running, you can pick the employees. You can filter. You can say you just want to run employees for a particular branch, department, grade, or whatever. But for now, we can just save this. I'll check maybe. And you can fetch the employees. So it will check the active employees, because an employee might have left. So it won't pick that unless they have left this month. Excuse me a bit. So it will pick the employees. Then what you need to do is you create salary slips. That's it. So when you do this, if there is a salary slip, it will redo it. Let me check what was created here. The connections, like maybe we have any. We don't have any. Let me just use this. So ideally, this is the salary slip for this period. Don't worry. Let me show you what we'll do. Let's assume we are just running for next month. So this is what is normally called a payroll run. You're running your payroll en masse for a particular department or for all employees. So the system will just create draft salary slips, for example. Let me use John Doe instead of specific names of people. So it will have picked the information, for example, the company department, posting date, the currency, payroll frequency, salary structure they assigned on the payroll entry and so on. Timesheet, if it's part of based on timesheet. The other stuff I'll come to them in a few. Then it will do payment days. The payment days is what I was talking. Assuming they have been working for a few days, it will pick these days. Still, it will base this payment days on attendance, because the system comes with So if I keep jumping, it's still okay. It comes with shift and attendance. Basically, you can have your employees check in via biometric or via mobile app and so on. Or even someone is ticking that these people have, have come to work today. And then later on, it will generate what we call attendance records. So the system, you can set up the payroll to be based on attendance. So that assuming I came for 20 days instead of 31 days, then I'll be paid for 20 days, assuming you're basing your payroll on attendance. And this is on a setup somewhere. So the other setup somewhere, which maybe I want to mention, but I hope is once you get the idea, you'll kind of get it. So the other setups like calculate payroll working days based on attendance or leave, and a gazillion other parameters. You can even send your payrolls via email, and you can encrypt them and so on. That's it. Coming back to the salary slip. It has just filtered for that payroll entry. If I was to remove this, it will show me all the salary slips that have ever been run in the system. But it will have the payment days. Then when you come to earnings and deductions, the system will have picked the basic salary, which is based on the salary structure assignment. It will have calculated gross pay, taxable income. Taxable income is gross pay minus provident fund. Is 2,400. Is it? But never mind. And then it will have done employee NSSF based on tier 1 and tier 2. It will have done gross pay. It will have done personal relief. This is a constant. Then pay, housing levy, NITA, and SHIF. And it will have done your gross pay. It will have done your total deductions. And it will have done your net pay. Assuming the employee had loans, and I said there is a loans model for this, then it will display the loans here, for example, and it will automatically have deducted based on the loan schedule. The loan schedule looks something like this. You just open one that is dispersed. There's a whole process. You need to give a loan, then you need to disperse it, and so on. Payment schedule. Let's open this one. Let me just pick one. So it generally when you do your loans and so on, when they apply for loans, you give them a loan, then you disperse the money. It will do a loan repayment schedule, same as they give in banks. And then every month now it will deduct the interest and the principal, of course. Automatically it picks, and then it kind of tags what has already been paid. Coming back to the salary slip, what you want to do? So it will have this, and it will have the net pay, it will have the bank details, which will have come from your employee record. So now you can print this if you want. The system comes with multiple print formats. By default, probably want to use the salary slip standard. You can customize yours, it's no biggie. And it looks something like this. So now what would happen is sometimes payroll has what we call ad hoc components. This person might have earned commission for that month, which is an allowance, for example, or an earning. So you can say there was a sales commissions of say 10,000, for example. So as you keep saving this based on the formulas that were predefined, it will keep recalculating your payroll. So it will adjust your gross pay from 40 to 50. If you add another one, for example, let me say house allowance, 5,000. It will keep adjusting, and it will keep changing this because they are based on the same formulas, for example. And it will keep adjusting this, and of course the net pay and so on. So some ad hoc components for individual employees, you can capture them here, for example. So now the next steps is normally you want to post your payroll. Another thing is adaptable. So you want to map your salary components within GL account. Then when you run your payroll and you are ready, you can come to this and you submit. Submitting this, you have submitted your salary slips. They cannot be changed anymore, and it should post on GL. But normally we use a journal template for this purpose. For the other reports, for example, so what you want to do is there is a report called salary register. So you can use this to kind of see the payroll, for example, like the one we did. You can filter from and then draft. So if it's submitted, you switch, and then it will just list all these employees that their payroll run that month, basic pay, how many days they were paid. You see like this, and there must be a proration somewhere. Those allowance, the ones I just added, it automatically picks whatever is added on the other side. Taxable, gross pay, employee, all the way to net pay. Total deductions, loan repayment. Actually, there's someone here with a loan repayment of 20,000. If I was to go and open this salary slip now that we are here, so the loan will have come here automatically based whether if the employee or whether other loan, for example. So now there are other questions you would want to ask yourself, for example. What happens if you have something like recurring? Think of HELB, or even you have given someone a recurring earning or allowance like airtime or whatever. So there's something we call additional salary, and it's used a lot in other places. For example, you can come and define an additional salary, and you say you'll be giving a, let me say, John Doe. You can say this is recurring or once off or recurring, and you can say it starts from today to say whatever. And this one you can either do a deduction, help as I'm giving an example, or you can be giving an allowance. I don't know which allowance. I'll say allowance, just an example. 5,000. Okay, the other parameters here, for example, I can save this and submit. Now, for the period I'll be running the payroll, it will be giving this employee this allowance of 5,000 every month until end of August, for example, or once off. So the other things you can use here. And even when you do bonus, eventually it creates additional salary. When you do what we call it creates an additional salary. When you do salary advance and you say deduct from payroll, it puts it here in the end of the month. So you can do what we call withhold a salary, for example, for whatever reason, so that maybe for 3 months you're withholding a salary for whatever reason. Then when that period ends, then the payroll continues. The other reports like bank remittance reports and so on, and other custom reports. At the same time, for Kenya, we have all these custom reports like NHIF, NSSF, or SHIF report, HELB, payroll register, P9, card, P10, and so on. There is a way to map them. If you look at this, there's a nice read here of how to map all this. For example, how to map your salary components to various P9 components, for example. So you map, and then when you run your report, it comes figures accordingly. Cash or piece rate, this is a customization. If you're paying cash, piece rate paid to your staff. So you define what item, for example, and then you can have like a cash or daily payout based on whatever you're paying them. Think of loading. How many linears do you load, for example, or offload for that matter. That's the concept of piece rate. The other elements like what do you call them? You can define what to call other benefits, or you can define what to call exemptions. For example, I forget them. But so you can define exemptions for specific cases and so on and so on. So that's it. I don't think there is anything, but that's an overview. Maybe we'll do another one. Maybe I want to check if we can start using income tax slips or why we can't use them. Maybe things have improved a lot for all. But that's it. With that, you have your payroll kind of okay set up, and you're good to go. And this applies to multiple countries. Thank you. I'm not sure if there are questions.
Thank you, everyone. Feel free to unmute your mic and post your question if you have any, or even type in the chat box too. All right. Okay, if there is no any other question, feel free to reach out to us via the email that you got an invite from. And in case of anything, just reach out. Someone will respond to you. You can also call our numbers on the website, or just do more research on ERP Next and FrappeHR and all the other apps involved in Frappe. So thank you again, Mushai, for the amazing presentation. And thank you all for coming here and giving us your time and listening into the payroll webinar.
Thank you, everyone, for attending. That's it.
All right. Thank you so much.